I'm Jim Jubeck, and welcome to this week's Trend of the Week video. This week's Trend of the Week is utilities are struggling as inflation surges. So here's the issue, that as utility bills have gone up, because energy costs have gone up, utilities have filed for rate increases. There's another reason for that, which is that utilities need to spend a lot of money to improve their grids, to tie them together, to make the grids usable for renewable energy like wind and solar, which is interruptible. So you need to be able to ship power back and forth. And so they're filing rate increase requests with state regulators. Basically, the issue is, hey, we want to put this much money into our capital base and we would like a return on it, so can you please approve that return? What they've been doing is getting some pushback. So far, mostly from utility commissions in the Midwest. Wisconsin, Minnesota, Michigan have all pushed back recently. It's important because most long-distance power goes through the Midwest, so it's not like these are states with a central role to play in the national grid. But for example, and I'll look at my notes, in Michigan, DTE, which used to be back in the day was Detroit Edison, applied for a $388 million rate increase. They got $31 million, so about 10%. In Minnesota, Xcel Energy withdrew its entire request for a 4% rate hike. In Wisconsin, regulators gave WEC Energy Group about 80% of what they asked for. So if you're looking at utilities as a place to hide in this market, the problem with this is that this was going to be one place where utilities showed a reasonable amount of growth, which would lead to higher revenue and higher profits, which would then filter into dividends. So this kind of resistance from regulators means that you can't really count on utilities to be adding as much to the dividend growth chart as we thought they might. So like a lot of other sections right now, you need to be very careful. Pick your utilities one by one if you can. Here's a chart for utility ETF. This is Utility Select Sector SPDR Fund. It's an ETF called XLU. You can see that it really cratered here on fears of higher rates. Interest rates has come back, but now it looks like it's locked in for another downturn. Utilities are usually a good place to hide in an uncertain market. Right now, I would try to pick and choose utilities very, very carefully, depending on what the regulatory atmosphere is and where they are, rather than buying an index. You can find a number of utility stocks on my portfolios in my dividend income portfolio, which is available both on my free site, gbackpicks.com, and on my paid site, gbackam.com. If you like this video, please give it a thumbs up. You can also get subscribed to my YouTube feed, in which case my YouTube channel, in which case you get notification when we do the next one. We're doing about 3 a week, not always on the same day. If you subscribe for free, you get notification when we do the next one. The two sites, the free site, gbackpicks, 3 portfolios, gbackam, paid site, 6 portfolios, and you'll find links to all those down below. Thanks very much for watching.